Is now starting. All attendees are in listen-only mode.
Good evening, everybody, and welcome to the webinar this evening. I want to just thank you for taking the time out to attend. We've got quite a good attendance, actually, so looking forward to sharing some great insights about where we are in terms of investments worldwide, offshore, the USA, and particularly what we've learned across the recent USA extravaganza, where we literally brought all our partners from the US and all the local partners here in South Africa that enable us to make investment abroad possible. And I'll touch on that a bit later on. I do actually have quite a few people can hear me clearly. So just please, and also get you familiar with the GoToWebinar control panel. So if everyone can just look at the GoToWebinar control panel, and you'll see there's a section that says questions. If you can just type in the question box which town or city you are from, that will confirm that you can hear me and see the presentation, and also make sure that I'm not just talking and pleasing myself, so to speak. Good, great. So we've got quite a few people, loads of people across the country. Great. So I'm going to assume that we can actually start. Thanks, everybody. What I will be also doing, because I know that being on a webinar can be slightly monotonous and boring because it's not that interactive, I will be asking you from time to time to participate in the webinar by just typing in your opinion or your answers or your views, or to any answers to questions that I'm going to pose to you through, hopefully just to give us a better idea of who we're talking to and how we can help you out in the future, but also keeps you alert and entertained and hopefully focused on the material as we're going along. So I don't like to do death by PowerPoint, but throughout the webinar we'll be making it as interactive as possible. So I just want to start off quickly, and I want to just introduce what we're going to be doing here today on the actual webinar. And what we'll be covering on the webinar today is just a brief introduction about who we are and what we do. We won't go into that too much. I know that for many of you on the webinar, you would have experienced IPS and indeed some of the people on the team throughout other webinars, or perhaps you were even at the extravaganza yourself. I will be also sharing what we've learned over the extravaganza. We've got some new insights, some new information, particularly around the markets as well, you're actually a serious investor. And then also we'll look at what's happening in South Africa, where and which country your money is safest to invest. So we will be doing a quick overview of that, which areas to invest in and which areas to avoid. And we'll also be covering some of investment opportunities, and then finally how you can acquire some investments easily and safely. And at the end we'll also be sharing frequently answered questions, because we've done this now for several years, and with the greatest respect, we tend to get the same questions all the time, and we'll just share the most obvious ones with you at the end. If you do have questions at the end, perhaps what we could do is see if we've got time for a question and answer session, but it will be dependent on time, because I will be trying to finish within the 90-minute period. So who am I? You might be aware that it's a slightly different voice to the one that you may be used to on IPS webinars. I'm Pinnick. I was actually at the, I lived in the UK for 11 years, so I apologize for the hint of my British accent, but it did actually get me a British passport, so I'm not too fussed about that. I originally studied electrical engineering in Cape Tech. I'm actually in Cape Town at the moment, only to realize that I didn't enjoy electrical engineering, and I ended up starting a property business when I was 24, and within the first 6 months of trading, I'd acquired £1.1 million worth of property in my own portfolio, and to creative techniques, other people's money, and I didn't have any seed capital at the time. So I've been investing since then for about 10 years internationally. I haven't, to be honest, bought in South Africa, and I'll cover why later on. There's much better opportunities abroad, in my humble opinion. I was also, as a result of some of the success I experienced in property, was invited to become a Rich Dad, Poor Dad trainer, and I did that for about 5 years, developed new programs within England and Europe, and also help them write a business program called Business Success Systems, which you can see on the right-hand side. Currently, as far as investments are concerned, I have other businesses, but as far as property investments are concerned, I only focus in Memphis, Orlando, and Atlanta in the US, and I'll tell you why. Unfortunately, at the moment, I'm a Stormers and a Liverpool supporter, so suffering from serious depression over the weekends. Please don't hold it. I'm also single and on the market. One of my property mentors always used to say to me, Ryan, you've got to take every opportunity that comes your way. So maybe there's opportunity on this webinar. For those of you who know me, I try and practice some sort of sense of humor, but it's not always successful. So hopefully the presentation will be slightly entertaining along the way. And if it's not, just forgive me. So let's just check here in the questions, make sure that everybody's listening and you can hear. Okay, we've got Cape Town. You are muted. Everyone's muted because otherwise we would be hearing everyone's noises and children. So let's press on. I just want to reiterate that the point of this presentation is to actually give you an overview and not to go into any particular area in detail. We've done several webinars where we focused on areas and focused on investments. We can certainly provide those for you, and this is really focusing on specific opportunities. So for those of you who have heard this section, just please be patient, but International Property Solutions is a company based specifically on providing a private banking solution for people who want to invest safely and easily abroad. It started by my good friend and business partner Scott Picken, and he really started the company when he was investing also around about when he was 24 years old. There wasn't anyone providing a bespoke end-to-end solution that was of premium or good quality service in investing offshore. And so he started out this business and since has helped over 2,000 people invest internationally to the value of, it's probably closer to 1.7 billion now, to be honest. So we might need to update that, but certainly lots of experience over the last 10 years. And I believe I am correct in saying it was IPS's 10-year anniversary just a couple of months ago. So we focus specifically on international property investment. We've got offices in South Africa, Australia, the UK, and the US. And we literally invest lots of money, millions of rands on research. We recently gave away a USB at our extravaganza, which had our most recent research regarding the US market, and we calculated that that research cost IPS 1.1 million rand. The reason why we do that is we are actually investors ourselves. We're not just salespeople or agents, as we call it, in the industry. We actually invest ourselves. And I'll touch on to why the company, why we actually do what we do a bit later on. I think that's an important point to note. We also work specifically with the best-of-breed partners, and that goes right from transferring your money safely and easily and effortlessly to abroad, right through to purchasing the best properties and the first-class management. So every single person that we work with is best of breed. Most of them are international organizations with serious footprints across the world. We have a sophisticated IT platform, and the reason for that is we really pride ourselves on our service, and we really focus on making sure that you know absolutely what's going on throughout the whole process, from buying right through to ongoing maintenance and management. We've got experienced sales division. Every single person in the company has invested or is investing at the moment, and we focus specifically on off-market opportunities, opportunities that aren't available to everybody in the public. Just a couple of things in terms of accreditations. We were the first South African company to register on the Association of International Property Professionals, which is a UK-based accreditation, and also Scott is the highest accreditation you can get in America to date. So we do focus on providing credibility from that perspective. Now, I want to just go straight into why this is an important time for us. I wrote the email specifically about how urgent this opportunity is in the States, and I'll come back to that in a second. But let's just forget about the States for a second and focus here at home, where we have some important considerations to take in place if you are actually earning money here. So whether you're employed or you've got a business in this country, it's very important as a rand earner to appreciate what's going on within our environments and within our country. And the first thing we need to consider is the rule of law. Now, that's basically, the thing you need to consider when you're an investor is, does the rule of law favor you or favor your tenants or your supplier or anyone else? In terms of us economic instability, I'm not politically biased at all. The closest I came to anything politics was having lunch at Parliament 3 months ago on one of the projects I'm working at, and I wouldn't recommend it. The brevity was stale. It was terrible. But I'm not absolutely interested in politics at all, but I have to be aware as a South African citizen what's going on around me, because it's going to influence my investment decisions. Wealth preservation, it's really important, whether you've got wealth here or abroad, how you actually preserve your wealth. We know that with the rand devaluation, a lot of people have only invested in South Africa, whether that's property or business or land. However, if you compare that to where we are going in terms of the country, your wealth may be appreciating in capital and income, but in the net sense of the word, you're probably losing money overall as a result of rand devaluation and confidence in this company from international investors. 80% of South Africans lose money when they invest offshore. I could probably confidently say that actually 80% of investors, period, lose money. And the reason for that, and you might say, why don't I present for Rich Dad anymore if it was such a good thing, is that statistic, that 80%, I'd probably say it's closer to 90% of people who spent a lot of money doing the trainings that I was teaching in England would actually never make their money back. And it's not because we were giving bogus information. She used the same information and acquired 1.6 million pounds worth of property. 1.1 million pounds worth of property in 6 months. But the reality is, procrastination, life happens. Things get on our way, and not everyone, I'd say at least half of the people we saw and the clients we see don't have the right mindset to become an investor, because for every property that we're offering in the marketplace today, I'd say we're making about 50 offers, we're getting 1 offer accepted. That takes a lot of work, and I'll touch on that a bit later on. So you can see why most people lose money when they invest, particularly offshore, and of course the currency devaluation. So rule of law, again, we've got previous webinars where we go into this in detail, but the rule of law simply states here in South Africa that, I'm sure those of you who've invested here and owned property here, if you've had the unlikely and most probable event that someone's not paid their rent on time, you are not protected as a landlord, which is absolutely ludicrous, and it's probably the consequence of living in a third world country. Look, I'm sounding very harsh here, but I love South Africa. I've moved back here after being in England for 11 years. I absolutely love the place, but we kind of have to appreciate what the rules are and the way the world works in this environment. So, the rule of law in South Africa is, if you are a landlord, you are almost perceived as the enemy. People think you're rich, or people want to take advantage of you. And we've had countless stories of clients and ourselves as well, where tenants have not paid and no one's there to help you out. And when you try and enforce something because the money's coming out of your bank account and causing serious financial harm to you, the police come about and make you the criminal and start accusing you. So this is an important thing to consider, is rule of law. I'm not going to go into the details of this. I think anyone can talk about it, and if there are any politicians on board, I do apologize. I'll buy lunch. But everyone's got their own personal view, and we know that the general sentiment is not positive at this stage in South Africa. We also know about wealth preservation here in terms of South Africans who own land, and particularly farmers. I'm not going to go into this in greater detail, but we do need to pay attention to what's going on a macro level within the country, and we know that land reform is a big topic, one of the biggest topics within politics. I actually had the pleasure or the displeasure of sitting in Parliament recently and heard the ongoing arguments about land reform and the uncertainty around that. And so there's lots of information you can read about that, and it's creating a lot of uncertainty. The impact is, by the way, I know that Scott's got a great story about when through land reforms, South Africa will then box in along with Zimbabwe as a country or as a state, because the perception is that whatever happens down here in Southern Africa, regardless of the country, it will impact other countries within the region. So even when Zimbabwe were going through land reform or whatever you want to call it, it impacted our economy at the time. So and investor confidence. Again, more than 80% of people lose money when investing overseas. This for various reasons. From the people that we've spoken to in the past, they come and invest with us. We know that people often make crisis investments. They're reacting to the marketplace, they're reacting to maybe a personal situation, and as a result they make crisis investments, and instead of using logic and research and good people on your team, they make emotional purchases based on either greed or fear, and that 9 times out of 10 ends up in tears. I call this a half-wise guy at the pub. You know, you can have is a little bit of information, because if you've got a little bit of information and you just become, you know, you think you're an expert in a particular field, you can create serious damage. I mean, let's just give an extreme example. I wouldn't necessarily go download an ebook on how to do brain surgery and then go operate on my family. You know, that sort of profession takes years and years of studying, about 7 years if I remember correctly, and then you have to sort of be a junior medical. Other people do it before you actually get the opportunity to operate yourself. Same with pilots. Pilots don't download ebooks and go out and fly planes. There's some serious amount of training that goes on, and property is no different. You know, you're playing with your inheritance, you're playing with your children's inheritance, you're playing with money that you've saved up over your lifetime, and it's crucial that you don't just listen to the clever guy at the pub who thinks he knows everything. And the reality is, if the clever guy at the pub knew it all, then why is he sitting at the pub, not, you know, traveling the world, being on holiday? So make sure you get the right information, and by all means, when you're talking to people, ask them what their credibility is like. It's really important. You know, we're not talking about apples and oranges here. We're talking about really big sums of money when you're investing, and I think you're absolutely entitled to ask people for information about what they've done, what results they've got, but also make sure that you're getting accurate information. I spoke to a gentleman recently, I think it was 2 days ago, and he'd been completely told a lie by another investor who tried to sell him a property in Clayton County, which is an area I wouldn't recommend. And the reality is, this guy was desperate, because the only way he could sell that property that he bought, which is a bad investment, is to another bad investor. So be careful where you get your information, and always check what the information that you get. Choosing the wrong partners. We see this from time to time. People who invest offshore choose the wrong partners to manage and source their properties. And that's a critical problem as well. People don't understand fundamental cash flows and property management, and they work with companies without local and international offices. Also, buying off-plan with long lead times. You know, we've seen in the past how you can struggle to get financing because of the uncertainty in the future. So I touched on that a bit more, because I think it's important that if you do recognize some of those characteristics, that you actually just get honest with yourself and say, good, I need to get some help here. I need to work with some experts, people who have actually been doing this for about, for a few years. So currency devaluation, I will be talking about that a bit later on. It's really important to note, but let's just look at an example here. If you had invested your money in Australia, and instead of account inflation, your rate of return, and also the rand devaluating in terms of currencies, you would have made a 350% greater return had you invested simply in Australia. Now that's just one offshore example. Obviously we invest in other countries as well, and we've done the research, but it just goes to show that when you are investing, you can't just say, oh, I'm making lots of money in South Africa. You need to pay attention to what's happening in the global economy, because if your local economy is obviously depreciating, then could be quite possible that you're actually losing money, even though you think you're earning a good return on your properties here in South Africa. We actually do our research on the Rand from a gentleman called James Panter. He does nothing else but analyze the Rand and one or two other currencies. I actually quite enjoy talking to him, being a numbers geek. But the bottom line is, and I'm going to save you a long presentation, we actually got a 90-minute webinar with him as well, and goes into the finer details of this. But all you really need to know is that year on year, from 1990 right up until now, the Rand is actually depreciated by 5.6% per annum. And in fact, it's continuing to do so at probably an increased rate. Why is that happening? Well, it's two fundamentals. Again, I'm not an economist or I'm not an expert, but all you need to know as far as South Africa is concerned is our productivity in relationship to the rest of the world, and our labor is decreasing, and our labor costs in relationship to the rest of the world within our own country is increasing. So we would have all been aware in the press of strikes and these sorts of activities in our workplace, and as a result of that, labor has requested, our workers have requested more income, more wages, and in order for us to stay competitive with the rest of the world, we've had to actually adjust our currency to manipulate our prices when we're actually dealing with international markets. So that's very basic, idea of why our currency continues to devalue. It's actually in our favor. It's in the government's favor to make sure that the currency devalues. It's not about making sure that the Rand is the strongest currency in the world, because actually we want to attract international investors to do business within our country. Where we're going long term, don't worry about the mechanics of this. The bottom line is what James has got is very much forecasting system. We've become a lot more efficient in predicting the weather, and that is a result of analyzing historical data. And James uses similar fundamentals and similar concepts to actually predict where the Rand's going. Now, what does that mean? Does this mean this is going to be 100% correct? No, absolutely not. But if you just think back to the recent Hurricane Sandy, we were able to, or the weather people were able to predict to come. And as a result, loads of people were able to actually get prepared for the situation and take action accordingly. And I think there were very few lives lost in the grand scheme of things. This is what we're talking about. Now, I'm not saying, by the way, the Rand prediction is a hurricane, but it's not good news according to the analysis that's going on. And we're actually looking at a long-term forecast ranging between 14 and 20 Rand to the US dollar. Just as a bit of an aside, I had a bit of a long chat with James recently, I think it was last week, because obviously I've still got properties in the UK. I was curious to know where the UK is going compared to America. And again, the long-term trend is going to be the US dollar strengthening against the pound, because what the dollar does tend to do is oscillate somewhere around about $1.3 to $2 to the pound, and it's now ready to actually strength of some of the, also the political decisions being made regarding the fundamentals within American economy. So that means, on a personal note, I was considering whether I should put money into the UK or put money into the US. So I'm still continuing to invest in the US for that reason. I just want to see if everybody online is just with us here, and if you can just share with me if you are actually if you've invested in South Africa already, just type. I want to actually just see how many of you have invested in the South African market. It just gives us a good idea. Okay, great. So that's quite a few. So brilliant, excellent. Invested in SA, cool. Nothing wrong with that. I know a few people that make money. What we're talking about here is diversifying. I'm not going to say you've done the wrong thing, but I do think it's important to diversify. So thanks everybody for participating on that. You all, obviously, very of you made a typo, so that's very impressive. Give ourselves a round of applause. So let's move on here. The next thing we want to look at is some more fundamentals. Why is it that we're so passionate about this? Why are we, working so hard on this opportunity? Because, again, I just want to refer back to the email we sent out I personally think this is the greatest opportunity we've got right now, but also it's not going to be around for much longer. And let's just look at some fundamentals here by Clem Sunter. For those of you who don't know Clem, one of the most respected business analyst and advisor within the country, and actually worked quite closely with Nelson Mandela and F.W. Clark in past as a financial advisor and advising them on business within South Africa. He's also written a great book called The Mind of a Fox. I strongly recommend you actually read that if you do like to get into the details of things, and perhaps follow his analysis on his blog as well. We have the pleasure of knowing Clem, and he recently did a webinar with us again. You're more than welcome to request a webinar, which we do have available. It's also on our YouTube channel, which you can check out. So these are the kinds of people that we like to get our information from. You know, when Scott and myself and Brendan and Yaku and Kristen and Sabine and Rolene and Teresa and everyone on the team, we sit down on a weekly meeting. We go, who do we want to know? Who do we want to work with? Who do we want to get our information from? It's impossible to actually know everything. I used to think I knew everything, but then that was about when I was about 16 or something, I don't know. No, probably about 24 actually. But the point is, it's impossible to know everything, and therefore the best thing you can do is align yourself with the experts in the industry. That's why we align ourselves with James Painter, the best expert in rand analysis. Clem Sunter, who's #1 expert in terms of identifying critical areas that we need to be aware of within the country. For example, he looks at statistically, he's got 3 different divisions. One where we are trading at the level that we are, and with the level of confidence that we've got, we will be probably the second best investment in terms of country compared to USA, UK, and Australia. Then if you start looking at some of the other factors that I spoke about in terms of currency and land reform particularly, the factors start to change, and ultimately it leads to a place where we could be a failed state, something we've seen in Africa quite a bit. Now, failed states is quite a severe state to be in terms of the country, and it was just a few months ago, I forget which month it was, but quite recently, where Clem actually said that South Africa had a 0% chance of being a failed state. As a result of certain indicators and fundamental shifts, he's actually raised that failed state probability to 25%. Now again, what does that mean? This means, all I'm saying to you is you've got to be aware of what's going on in the country. You've got to be hedging your bets. So investing is a very personal thing. If you believe 100% that South Africa is the country to invest in, then put 100% of your money in the country. If you are uncertain by 50%, then why not invest 50% of your money elsewhere? So that's the point of all these statistics. This is the point of all these indicators. And again, they go into much more detail. And if you are curious about that, then please send us an email, and we can get in contact with you and go through that. So this is an important thing. The signs are starting to be a bit more contentious than usual. So we've actually looked at the US, and if I just go back to the slide over there, you'll notice that the USA is the best country to invest in, regardless of the different factors involved. He's actually spent a lot of time in creating a model, which I will refer to a bit later on, to make this information more palatable and easier for you to determine where you want to invest based on your personal circumstances. So yeah, I will be talking to you a bit later on about how you can actually get hold of this information. And in fact, if you want us to help you out with your investments, then what you need to do is actually request an investment consultation. And you can do that at any time during the webinar. All you need to do is type investment consultation in the question box provided. If you want to do that now, one of our team will be able to actually give you a call and just to get an understanding of where you are. Maybe you've got some questions about some of the material we've spoken about, or maybe you've just got some questions about what you want to invest in, or maybe you just want to invest right away and you want to work with us. Then please go ahead and type in investment consultation. You can do that at any stage during the webinar. So, well, these are some, again, of the fundamentals that Clem talks about, but again, we've put in our research. Those of you who have received our emails will know that over the last, well, it's probably about the last 4 to 5 years, we've invested 1.1 million rands worth of research into getting to this final opportunity. I know Scott had traveled to the States on several occasions and had not invested yet because a lot of the fundamentals weren't in place. However, he always knew that there was an opportunity in the US and as a result persisted with that. And as a result now we've got all the mechanics in place to make sure that investment is not only a good return but continues to be serviced easily and effortlessly for you. We all know that the US is a first world economy and we can actually speak English with them, which is absolutely crucial. I know several people who've invested in Eastern Europe and other countries that are non-English speaking. Spain I know is a big problem. And even just to get an update on whether you've still got the bill or not, there's a problem. You know, if you can't speak Spanish or Bulgarian or Greek or whatever it is. So it just makes it so much easier. And you know, communication is absolutely crucial when you're dealing with property because property is all about people. They've got very well developed property laws. So if you remember, I spoke about the rule of law. The rule of law in the majority of the states in the US favor the landlord, and I'll show you which states in a second. There's a lot of opportunity in the states, and we get loads of opportunity coming through our emails every day. So there's plenty of opportunity for everyone. It's easy to buy and sell. When Scott started telling me about the US, I was quite skeptical, if I'm very honest with you. And one of the key things he mentioned to me, which made me realize I'm missing an opportunity here, was the way in which properties are bought and sold and the efficiency. You can literally speak to us tomorrow, and we can, your needs are, let's say you want to invest, and within 4 weeks you can own a property that's being rented and you can start earning an income. That is exceptional. And even in the UK, that's not possible. You're looking at about a 3-month period right now at the moment. And that's good. So if you're comparing this market to the UK, it's 3 times faster. I have no idea what it is in South Africa, but I believe it's so long that it's not even worth me doing the research and following it up because I've heard so many stories about people who have taken long to purchase their properties and sell their properties. It's easy to visit for holiday and business. We've got a lot of direct flights now. It's quite easy to get a holiday visa. I've got a B1, B2 holiday visa, which is extended for a 10-year period. They're fairly tax efficient actually, as far as business and entrepreneurship is concerned, which is quite favorable to us. It's certainly in most areas competitive against rates in South Africa. It's got a perfect investment profile, which I'll touch on a bit later, based on and the model that Scott produced. And we know that historically, recently as a result of the bubble, there's a 35% drop in the market value. Also, what we're doing, properties that we're buying and sourcing for our clients and ourselves are actually well below replacement value. And what we mean by that is if you were going to actually build exactly the same property that you're purchasing from us, it would actually cost you more to build it, and you don't have to be a rocket scientist there to see that you immediately got value built into the purchase. Not to mention the rental income that goes on top of that. So loads of reasons. Again, if you want to know more about why we invest, there's plenty more reasons. I'm just very, very aware of time and more than happy to have an investment consultation with you and one of the team can talk to you. So if you're looking at which asset class to look at, we all know if you look at the countries, vast majority is going to include property. I think in the UK Times Rich List, 70% plus of people on that Times Rich List are actually property or real estate investors. It's the one that's most safest, most predictable, and at the end of the day, regardless of what's happening in the world, people need homes to live in. People don't always need gold, and as we learned, people don't always need banks, and the stock market is incredibly volatile at the moment. I don't actually I've taken all my investments out of the stock market. It's just too volatile, and I wasn't even investing. I had some serious investors investing there. So property is your bet if you want to know where your money is going to be in the future, and most people have created wealth through property. If you want to go check out what's caused a big stir in the States at the moment, Warren Buffett on YouTube, he went on and said publicly on CNBC that if he had a way of buying a couple 100,000 homes, single-family homes, in the States, and a way to manage them, he would go for it. He also, funny enough, said if he knew he was going to live for another 10 years and reap the rewards of it. So he's not feeling confident there about his lifespan. But he basically said single-family homes in the States is one of the best, if not the best, investments available today. Now, that's good for us because and what we're doing, but it has created a knock-on effect, which is why I'm expressing the urgency around the investment here in the States, because this has woken up those sleeping giants, those big funds with $100 million or so, and these guys are now going in buying properties quicker than we can find them. The important thing to note is that although this has impacted the market, we aren't actually IPS ourselves. We know other people are and our competitors are compromising on returns. We're actually not compromising on return, that it is slightly more difficult, and it's going to become increasingly so, to get good stock. So that's the key thing. So it's not like we're not getting great investments, but we are actually noticing a diminishing stock value in each area that we're investing. So so it was a bit of a double-edged sword with old Warren publishing this video for us. But go check it out. It's a very entertaining video. Yeah, this is important. Again, we subscribe to Investor. I recommend you do this as well. You can see that by Germany and actually the United States over here, they are actually 20% below market value in the current indicators. Now, my second arrow is not coming up, which is by the states there in the middle, but that's an important thing to note. If you look at South Africa, we're about 2% of the value that where property should be. You look at other markets like, where's the UK? You can see it was here earlier. We can see other areas and other, oh, there we go, Britain. I wish they'd call it one thing and keep it consistent. But properties in Britain are typically at the moment 20% over their true value. And there's a lot of factors that calculate these sorts of things. You can actually go onto the Economist website and you can actually use one of their indicators where you type in or you click on these fields on the right-hand side and you can compare the house price. Now you'll notice it's a bit of a downside in that all the lines are blue, but all you need to know is the line at the bottom is the US. The line at the top is South Africa. So we're not going to experience any serious capital growth like we did in the last few years. However, the US is a stable, more predictable market compared to some of the other markets in the world, and that's important to know when you are looking at long-term investing. This model that I referred to that Scott had created, in fact, I'm pretty sure it's safe to say that Scott was very chuffed to get the thumbs up from Clem, because what Scott did here was he basically took the information that Clem created from his research and put it in a more visual, easy to understand model so that we can actually use it to make sound investment decisions. And what's great about this model, and if you want to help you determine this, we can actually give you a investment consultation. Then you can actually change the factors of each country based on where you think it may be. So there's different factors like currency and government stability and economy and all this kind of stuff. So you can actually change the factors on these countries, and you can then determine for yourself where you think different countries are in terms of risk, reward, and return. So at the moment, we've just used very conservative estimates, and the USA at the moment is the only country where it's getting a high return for a fairly low risk. You can see where the UK is there. It's between low return, low risk, and low return, high risk. And that's actually why I haven't invested in the UK for nearly 2 to 3 years. Really important to note that. Just as from a point of credibility, because I think this is important to note. So Pinnick and Clem Sunter are actually, or Clem's going to do the forward for Scott's book that he's writing, hopefully not when he's on holiday, but it's important to note that the type of people we're hanging out with here at IPS, these are the types of people that are more than happy to give their time with us because they know that what we're doing is credible. They know that what we're offering is a premium service, and they know that they are going to be affiliated with an organization that does good business. Someone like Clem Sunter associating himself with a fly-by-night company or some company that started up 12 months ago because they've seen a trend or something like that, which we're seeing lots more now in the marketplace when selling offshore property. So again, when you are dealing with anyone, ask them how long they've been trading, and make sure that they've got some good credibility and strong people behind them. I know the book's coming out soon, so make sure you keep a lookout for that. It's a very, very powerful book. So how did the opportunity in the US come about? Very briefly, if you don't know the story, there's loads of documentaries on it. So Michael Moore does a great one. He actually runs into Wall Street and demands his money back, and then they arrest him, which is quite funny. But the bottom line is the Americans were in a position a few years ago, prior to 2006, 2007, where literally almost anyone could go into a bank and get a mortgage. And these were pretty affordable at the time, and as a result of the mortgages, subprime mortgages, expiring and then going onto a higher interest rate, their affordable monthly payments became incredibly unaffordable, and as a result, they then started experiencing something called jingle mail at finance houses, where people just said, you know what, we're fed up of paying our properties mortgage and we can't afford to do it anyway, we're going to send you the keys. So this happened impact on not only the US economy but the global economy, which I'm sure you're all aware of, and so fundamentally that created a burst in the bubble or a crash. What that did, is it actually just corrected the market. You can see here that there was a huge bubble in the States, it then bottomed out, and it basically corrected itself, and now we're starting to see a natural, organic, upward trend that's not been synthetically influenced by outside factors. So and here's an example of an article that I pulled up today. So if you can't read that, don't expect you to read that, by the way. But the point of this article, which you can go look on to the USA Today, which is one of the leading newspapers there, is it's basically saying that home prices rose more than 8% in January, posting best annual gains since summer 2006. So you can see that the market has corrected now, it's stabilized, and it's starting to get confidence back. And this is an important thing for us as investors, particularly those of you who I know I can see on the webinar who have invested with us. This will be even better news than what you've experienced with us already, because you'll know that your existing investments will continue to grow in capital growth over and above the fantastic rental incomes you've enjoyed from investing with us in the past. So I would strongly recommend that you keep abreast of current information country. Make sure you are actually looking into the local newspapers. Here again, what determines the natural growth path of any country, and its income. So basically it's house price versus income versus also earnings, and that's an important thing to note, because you can see again that bubble burst over in the States, and it's starting to correct itself. Just on that note, it's really important when I say income, thing that I should have mentioned earlier, is when we're investing in property, most people, that 80% who lost money, would have focused on trying to make money quickly, sort of get rich quick, which doesn't exist, by gaining massive capital gains like people had done in South Africa. That was a bit of a fluke. No one could have confidently said that would have happened, and I can tell you, I know 9 times out of 10 people have actually got stuck with properties now that are cash flow negative. So when you are investing, make sure you're not only investing in an area where you expect capital growth, like the States today, and the areas we're investing in, but also you're expecting your properties are cash flow positive by some decent margin in case the interest rates go up. So that's just a fundamental property tip there for you that I could have mentioned in the beginning. So here's an example of a property. When I was talking to you, this property is in Atlanta. There's a typical property in Atlanta, and that property, if you were to build that exact same property today would cost $240,000. That property was purchased at $135,000, roughly around about 60%, or 50 to 60% of the replacement value. So it gives you an idea of the types of opportunities that are available at present. But what's most important for me, actually, anytime I look at an investment, is actually relationship to the purchase price, because that will determine what your return is. I don't think, I know Scott talks about this a lot, but I don't think you can actually go anywhere in South Africa and buy a house of that size for a like-for-like, cost value. So, if you paid 1.3 million rand for that property, I don't know where that would be. It might be out in Kalahari or something. Well, not, actually, that'd be really expensive out there. That'd be 10 mil. But from that side, it's really important to know what your purchase price is in relationship to replacement and market value. Now, this is a key thing I want to actually touch on, and this is something I actually learned in hindsight. One of the key things I learned about business and investing as a rich dad speaker was because everyone perceived me to be this authority, and I was on stage talking with Robert Kiyosaki and all these amazing people. I was coming through my inbox and my letters and my mobile that no one else ever got access to. And it made me realize that those of you who are in business would agree that there is this inner circle in business. And the reason why I bring this up is that a lot of people try and go out and invest and do it on their own. And to be honest, you're destined for failure. It's almost guaranteed. Unless you're a ruthless person without any life and no social responsibilities and all that kind of stuff, make it happen. And we just know through nature that if you have many birds flying in a flock, they actually save 20% of their energy, and they can fly 5 kilometers faster than if they were alone. Now, I don't know where we got that information from. I doubt Scott actually were running after the birds and was testing them with a radar gun. But what I know that is most important and most real and most relative to you, there is an inner circle in the property world. Whether you're investing in the States, Australia, South Africa, there is an inner circle, and it's the inner circle who get the best deals, they have the best management agents, they have the best finance opportunities, and it makes me think of that phrase, why do the rich get richer? Well, because the rich hang out with the rich and they only deal with each other. So that's just a reality in life. And unfortunately, if you're not part of that inner circle, you are going to be fighting and competing for the scraps. What it looks like in terms of property is you have access to best possible off-market deals. I mean genuine off-market deals. It's not these other sourcing agents, who have an email list and they go, oh, this is off-market, and you happen to get the same property through another guy. The people that we work with, our guys on the ground, physically own the properties that we either buy ourselves or pass on to our clients. So this is not just some rookie agent trying to make it quick. The people on the inner circle know areas inside out. They've got leads into best information online and sometimes local government and information that's happening within the areas. They have the ability to move and adapt quickly. If you can't adapt quickly in property, you're going to be left there behind and you're going to lose your money, period. They also understand the market locally. They understand what they've got friends in certain areas. They know which, they talk to cab drivers. They talk, and they actually want to know what's happening on the market. And the people in the inner circle obviously get to buy properties at prices that no one else can. So what that means, if you just think about it, is if you can get a property for twice the discount, you can possibly buy 2 properties for the price of 1 if you weren't in a circle. This is what we're talking about, and this is why Scott took about 2 or 3 years to actually set up the operation in the States, because this is what he was looking for. He was out there, who's promoting the best opportunities and who are the people that can actually manage these best so that we can actually invest ourselves, but also feel confident that we can introduce people and existing clients to this inner circle. So if all of you, if you can just type in the question box, if you've had any experience of this, and maybe you can just let me know if you agree with that or disagree. So if you can just type in agree or disagree with that whole concept. This might be news, and so yeah, a lot of you agree. I recognize some of the names on here, and I know you guys are business owner. Look, it's not an exclusivity thing, it's just reality, you know, and I think the key thing to note as well is with our partners, as far as South Africa is concerned, they only deal with us. They don't deal with anyone else. They're exclusively our partners, and we're exclusively theirs in South Africa, and that's for one reason only. And that is we have efficient systems. When there is a problem, if you, by the way, if I want to say to you, if you expect to invest in property and not experience problems at some point in the future, then you probably never invested in property. But what we do commit to doing is that when we do get surprises every now and then, we actually commit to making those surprises easy to sort out, and we always commit to finding a solution. And that you can imagine as a it's going to call it that, is an absolute, you know, ideal scenario. I know that on some of the agents, we're one of 4 organizations worldwide that these guys are dealing with. And I think that speaks volumes about our credibility, because we know what we're doing, they trust us, we're experienced investors, they don't have to educate us. This is why these guys don't actually work with the public. The last thing they want to be doing when they're selling 12 to 20 houses a week is educating one person on or why or what a lease option is, or you know what a lien is, or all that kind of stuff. That's what we do. We educate you guys and help you out. But the agents that we deal with don't want to be dealing with that stuff, because they're viewing 40, 50 houses a day, and they don't have time to be educating people on how to invest. So the inner circle is something which doesn't get spoken about, but to be honest, it's something that's real and it happens, and you have an opportunity to get into that with IPS. Now, why do we invest in the areas we invest in the States? Excuse me. Well, it's simply this. The southeast of the States is the 4th largest economy in the world. Now, why is that? Let's have a look at this, right? Also, sorry, let's just go on to this caption. You know, where do you invest in the States? There's 50-odd states in America. Now, interestingly enough, the red states here are states where they're basically states who are pro. They actually have laws, and the rule of law favors the landlord. So typically in these states, if you own a property and the tenant doesn't pay their rent on time, you immediately get well, depending on your management agent, what happens with our management agents is within 3 days they get a letter and an email and a text saying you better pay your rent. And if they don't pay their rent within 45 to 48 days, they are actually escorted out of the house by what's called a put-out crew. And Scott and I saw, and the guys that were on the buyer's trip in February saw one of these put-out crews. It's quite horrific, but what it means is that people actually pay their rent, because they know that if they don't pay the rent, they're going to be evicted. The blue areas are more social governments, and you can see governmental departments. And that's where you can see California, Nevada, you know, some of the other areas that people are, which I wouldn't recommend, because if you do actually get a tenant that doesn't pay, you may as well have invested in South Africa, because the probability is, you know, it's going to take you ages and cost you lots of money and lost rental and lawyers and solicitors fees to evict that person. So just to give you some idea as to why we invest in some of the areas. Again, if you want to get any questions answered specifically about any aspects of tonight's webinar, just type in investment consultation and we'll give you a call at some point. So we actually just focus on the southeast, not only because it favors the landlord, favors us, the investor, but also it's the 4th largest economy in the world. Now, let's look at the 3 areas we invest in. And I will actually say we've researched extensively 16 areas or 16 states across the US. Every time we do a buyer's trip, which is every quarter, we do go and research another area based on our online research. We only feel confident to invest in 3 areas. The first of which is Memphis. Now, we've only got two FedEx planes there, but when I flew over Memphis in February to go look at these properties, I could not believe how many airplanes FedEx owned in Memphis. It was unbelievable, staggering. And it really gave me unbelievable confidence as to the economy in Memphis. I later learned that it's actually the largest distribution in the US. It's a world distribution center. Just to give you an idea, Disney, every single product that Disney sells across the world, whether it's China, South Africa, America, anywhere in the world, it all goes through Memphis. Memphis is also one of 4 major cities on the I-69, which is the interstate that goes right from the top of the states, I forget where it starts, right down through to the bottom of the states as well. So you can see it's a mode of transport for trucking. A lot of trucking companies based in Memphis. It's got the 3rd biggest railroad center. We also know it's not on the slide, but it's got the Mississippi. So there's 4 different ways in which businesses and the economy can distribute products across the world and within America. So you can see that regardless of what's happening on the global economy and America's economy, Memphis has something what I call its own economy, like its own local economy. London's the same. London you can't really look at when you compare to the UK because it's got its own economy. A lot of people in there driving property prices and rentals up. So Memphis is one of these areas where it's very stable regardless of what happens on the outside within America. Now, when we do take people on our buyers trips, I always have the same conversation. Memphis look like they're stuck in the 90s. They're not the glamorous properties. I probably wouldn't live there. If you're on the webinar and you are living there, I do apologize. I don't mean to be offensive, but that's reality. However, they are neat. They're in good condition. The properties that we source are highly maintained, and when the tenancy does actually switch over, they are refurbished to a quality that all tenants like. Now, for those of you, Memphis is your greenhouse. You buy 4 greenhouses and then you get 1 red hotel. Now, this is what I would call Memphis. It's your greenhouse area. You can get into property investing in Memphis from about $50,000 and upwards to about $90,000, $100,000, right? Now, here's a typical property in Memphis. It's probably one of the better ones. They do come a bit small as well, but in relation to what we know, they are very good. The best thing about Memphis here, if I can just give my personal opinion on this, is that we are offering and are able to offer financing in Memphis at 50% loan to value. Now, I had a gentleman call me recently, and he said, wow, I want to get finance at 100% loan to value. And I went, I'll tell you what, you go find out where you can get those deals, and when you can, give me a call, because I promise you we'll do lots of business. As an alien, we're called aliens. That's just what we're called. In America, basically, we're a foreign national. You won't be able to get finance unless you've got an American bank account that's been trading profitably for 2 to 3 years, or you've got a social security number. So those are the 2 things you need if you want to get bank financing. And you need a good credit rating. But 9 times out of 10, South Africans don't have that. And so what we can offer in Memphis is 50% loan to value, which is great. That financing is actually a non-recourse loan secured against the rental income of the property. Let me explain what that means. Our business partners or our partners in Memphis have actually gone through a stringent, almost like an audit, a very detailed process that oh, sorry, hang on.
How's it, everyone? I'm not sure where where Ryan went to there. We are still online, so no, don't worry, you haven't lost your sound. I'm a bit confused as to where he's gone to. You should all be able to hear me there, but let me just find out exactly what happened to him. I heard his phone ringing and or something happened. Boom, boom, boom. I mean, basically, just to follow up with what Ryan's saying, one of the things that's most important in Memphis is that they've got this finance available. And so, just to give you an idea, those properties that he said were starting at $50,000, you can actually get in with a $25,000 investment, and then actually need to we basically the great thing with it is that you've got a $25,000 investment, and then $5,000. Generally I would say $3,000 to $5,000. Adeline, thanks for letting me know you can hear me. Appreciate it. Yeah, I mean generally looking at between $3,000 to $5,000, say, in costs. So, and I'm just being conservative. So call it $30,000 is the way.
Gives me an idea.
Involved. Sorry, Ryan.
Okay, are you there? Sorry, it's the landline cut off.
We got you. We got you, yeah.
Have you switched the landline back off? Are you on the phone? Okay. Sorry, it's just the phone tends to cut the internet off. Where did you hear me last, Scott?
Basically Memphis, and you were talking about financing, and I was just explaining that with the financing that we've got, it allows people with $25,000, $30,000 to actually get involved in buying single-family residential homes in America.
Yes, that's right. Absolutely, yeah. So if you're interested in knowing a bit more about Memphis, and perhaps you want us to give you a call and talk to you about that, then please type Memphis into the question box provided on the GoToWebinar control panel, and we can talk to you specifically about Memphis. Now, moving on to Atlanta. The average net return on your rental income varies from 10 to 14, maybe even 15% in certain areas. So this is high income, low to moderate capital growth. These are the types of small houses I was investing in England because I was buying income. And I think this is a really important thing to note, is that what you're doing here is buying income. So you're effectively buying a small business, and every single property you buy must be producing an income. So that's what you can expect from Memphis. Good income, and if you want to get high income returning properties, Memphis is the area. Atlanta is the fastest, or was the fastest growing city in the US from 2000 to 2010. Its current population around Greater Atlanta is 5.5 million, and there's lots of Fortune 500 companies situated there, Coca-Cola, CNN. And the thing about Atlanta, which I always find I'm speaking to potential investors about, is the amount of space in Atlanta is huge. A 40-minute drive into work is quite reasonable for anyone, whereas it's not like London where you just jump on the tube or something like that, or New York. So, people have lots of space. It's any properties within an hour's drive of the city center is worth looking at. Now, the great thing about Atlanta is that it is actually the economic hub of the Southeast. Whereas Memphis was the distribution hub, Atlanta is the economic hub. And you can see now why we've specifically chosen these areas as well. So there's lots of commerce going on there and continually growing throughout even the difficult times. So this is a typical property in Atlanta. This is actually one of the smaller ones, believe it or not. The properties, every time we go there, investors often come over and look at the properties that they've purchased with us, and they end up saying something like, gosh, these houses are much bigger and better than the ones we live in South Africa. It's quite funny, actually. And they're very good quality. This is a different spec, remember, whereas Memphis, you're looking at typically a majority rental market. Atlanta is an owner-occupier market. And so these properties are finished to a high quality. You could quite self. In fact, the guys we work with do actually fix them up slightly better than the competition in the area, because obviously we want to let them out quicker. And they basically buy properties and basically, sorry, I just got a bit stuck there. They basically buy properties and also give the tenants the opportunity to purchase the property in the future. You get a different type of tenant coming into the property. They've got a different mindset. They actually treat the property as if it's their own. 99% of the time, tenants do not exercise the option to purchase, so don't worry. The purchase price that they were given is way above market value. It's about 60% above, so they never actually really exercise. But I think it's important to note from a mindset perspective that the agents we work with in Atlanta only sign tenants who are willing to consider purchasing. I used to do options, many options. I've done dozens of options in the UK, and I've had one person exercise the option. I think I've done about 50 or 60. So don't worry about saying, oh, what happens if the property, am I going to lose my opportunity to invest long term? It's highly unlikely that someone will do it. But what that also means is that you do get a premium on the rent. Because people are willing to consider purchasing the property, they are actually going to be willing to pay a good price. Atlanta is a good area as far as capital growth is concerned, but also a great area in terms of income. So this is if you want a balanced investment, Atlanta will give you good capital growth because of the economy there, but you'll also get some good rental return. You can expect anything between 8 and 11 to 12% net on the properties that you're purchasing at the moment. Just to give you an idea, over the last 2 buyers trips, so we had one in February and one in October, between those 2 buyers trips, the properties that our investors had bought through us had increased between $15,000 to $20,000 per buyer's trip. So now you can see why we're focusing so much on the urgency, and it's important for you to actually invest now, because we don't want you to actually miss this opportunity. So what we are looking at now is Orlando, and so Orlando it's basically got a world of its own, in the sense that there is Disney, Universal World, and SeaWorld. Now, this is different to. Sorry, Scott, can you still hear me?
Yeah, we got you clearly. Yeah.
Okay, cool. I just saw it a missed call for me. So we can see that Disney, Universal, and SeaWorld actually are very different to somewhere, let's say, like Las Vegas. All about gambling, and it's a bit of a luxury. What we've learned from the guys on the ground there is that families do tend to spend money and take their kids out regardless of what's happening. It's that feel-good factor. Whereas going to Las Vegas for the weekend, or going to Las Vegas to get married, or whatever the situation is, or just to take some time out and take your clients, that only happens when times are good, because it's seen as a luxury. So this is a very, very different and unique economy. There is only one Disney. I mean, Paris is great. I've been there many times, but there really is only one Disney Orlando. It's massive. I think, I can't remember, maybe Scott, you can remember the stat, but Ray and Jeff were saying that Disney is something like the size of Cape Town or something ridiculous. I don't know.
It's like the size of Cape Town. Yeah. 28,000 square kilometers.
Yeah, that's right, yes. Yeah. So Ratanga's got quite a lot of competition. That's what we're basically saying. So let's just look at some important statistics fundamentally. And again, I'm going through these areas very quickly. If you actually want any information about these, please request an investment consultation. And again, I probably didn't actually ask you for those who are interested in Atlanta. If you are interested in Atlanta, please type Atlanta in. We can happily give you a call and discuss that and go into more detail, provide you information and research and examples of properties as well. In Orlando, there's currently 2 million residents in the greater area. We're finding that there's a big trend of the baby boomers migrating there because of the climate, and the affordability on property. It's a great affordability there actually. It's a beautiful place to be in. We were there round about, autumn, winter, I think it was, and it was, you could have sworn it was summer. So the population is expected to increase dramatically, which makes it good for rental markets. The airport has a tremendous amount of traffic, 1 million per week. It's the 29th busiest airport in the world. Obviously, Walt Disney alone attracts 48 million visitors per year. That stat, 48 million, was actually the stat where during the recession. And prior to the recession, I think it was 51 million. So just again to show you that people are willing to invest in, taking their families out and keeping them on their holidays. This is a crucial thing. Disney employs nearly 70,000 employees. I had the privilege of actually meeting some employees and asking them very, very closely about how they work and what they think about property and stuff. So, there's a lot of people working within that sort of unique economy, which self-sustaining economy is the word I was looking for. So again, very safe, very predictable. It's again more around the stuff that you are used to here in South Africa, where you've got a swimming pool, a tennis court, and gyms and those sorts of things. And they're finished very, very high standards. Again, financing is available on certain properties. We can get single-family homes as well, but the majority of our investments are condos. A lot of people buy these investments based on the fact that it's aesthetically pleasing and they're familiar with it. The reason why I put this is, in terms of returns, Orlando is between Memphis and Atlanta. So whereas Memphis was massive income, Atlanta's massive capital, Orlando's in the middle and in between. Anytime you are compromising income, you will always increase your capital gain, and anytime you compromise capital, you'll actually get a better income return. And so Orlando's in the middle of the two. Again, if you're interested in Orlando, it was actually our most popular region last year, where most of our investors invest there. Then please type the word Orlando in, and we can send you some examples of properties. I do want to actually stress at this point that we can only send you properties that we've got available. We are not an estate agent. You can't go onto a website and look at what's available, because the market is so hot at the moment. Properties go within 48 hours. So it's important that you actually work with us. And again, referring back to that inner circle, if you're not in that inner circle, you're not actually going to get any idea that these properties are available. So basically, the other opportunity that we've got within the States is Wealth Migrate, which I know is very close to Scott and Brendan's heart and everyone here at IPS. And it basically gives people the opportunity to invest if you've got a budget of $15,000 or more. And it's based on the concept of crowdfunding, which we're seeing is a massive trend in every industry. There's financing. A lot of entrepreneurs can't finance their own businesses, so they're raising financing through crowdfunding, through the odd 10 Rand here and the 50 Rand here. And what Wealth Migrate is all about is investing in these same opportunities that I've shown you, as well as big blocks of apartments and those sorts of things, perhaps in New York. And it gives us all an opportunity to have more buying power. Myself and Scott and Brendan and Yaku and Raylene and Teresa and Kristen and Sabine, we all put our money to opportunities that are out there at the moment. And actually, most people can't either. So we said, why not create a crowdfunding principle and actually go out and purchase these properties? In fact, we're going to acquire our first round of investments for Wealth Migrate in 4 weeks' time, or 4 weeks' time when we go over to America. Now, this is a very specific investment. It's unique to IPS, particularly in South Africa. If you are interested in this, please type Wealth Migrate into the GoToWebinar control panel and you'll hear about that. I do want to stress this is not a fund. This is not structured in a way where we get commission and it doesn't matter what the earnings are. The bottom line is, if you don't make money on your money, we don't make money either. We actually have a performance-based earnings program on this, but also we've invested our own money into this particular structure. So we're as much into this as you are if this is something you want to invest. It's not a scheme that someone's created off a cigarette packet, and they can run off with your money, which we've seen recently over in the Caribbean. So now I just want to cover those. So those are basically the opportunities that we've got available, and if any of those are of interest to you, type investment consultation in and we can actually give you a call. Now here are some frequently answered questions, or questions we get every day of the week. When I look on the internet, the valuation seems so much lower. What we found on the internet is that a lot of properties are actually listed at a below market value property, below resale price, meaning that the agents are actually enticing people to actually inquire about the property. It's actually a marketing strategy. So it's a bit like an auction in the UK, where the guide price will be $40,000, but it eventually sells for $80,000. The thing that's actually squashing that even more these days is that funds are actually going in and paying over the odds for property, because they only want a 5% return on their money, and so they're willing to pay 10, 20, 30% more on the purchase price than what everyone else is willing to pay. So when you're looking on the internet, you're actually not comparing apples and apples. You're actually looking at properties that are listed below. I know that this is a story that perhaps, I don't know, Scott, if you want to maybe just tell a story to offend you.
No, sorry. Just 2 seconds.
Sure. Well,
Yeah,
the short of this, everyone, is that
I've studied construction management. I've worked on site for 5 years. I think I'm as experienced, well, a lot more experienced than the average person out there. And from London, I built my dream home. It's actually that big home you can see right at the end of the first, you can see the green at the end of the first hole at Atlantic Beach in Cape Town. I bought the land in 2004, actually 2003, because you can see there the date. And I built the house, and that's the house there. I don't know, Ryan, if you can just point to it, but right in the middle of the picture there. And the most important thing that I did is that it was going to be my dream home. I'd lived in London for 9 years, and all I wanted to do was to build a big dream home, nice 4-bedroom house overlooking the golf course, the ocean, Table Mountain, and everything else. And really, it was absolutely fantastic. The problem was I paid actually quite a good friend to be a project manager, and it went 50% over time. So it was supposed to be complete in 8 months, and it took nearly 14 months. So not only did I have massive costs involved, but the real tragedy of it, I actually ended up selling it 2 years later because the construction quality was just horrendous. And I learned a very big lesson back there, that if you're not on the ground, and most importantly, if you don't have people on the ground, you're dead in the water. And so I've never again tried to build a house or tried to do everything myself from a distance. And it very much was the philosophy behind IPS, where we go and we find the best of breed partners on the ground, the guys that are on the ground, the guys that are kicking doors down, the guys that can provide the quality. Because I learned with my very own dream home that I finally sold, that I had to sell because the quality was so terrible, that you can't do something long distance. It doesn't matter how much experience you've got locally, it means nothing in an international market.
Yeah. And of course, you need to take into consideration the cost of the financing every month of owning that property and all that kind of stuff as well. So, yeah, absolutely. And if the guy that bought the property from Scott is online, we apologise. So, it's just again, that's another risk of trying to do things on your own from afar. It's you've got to have someone on the ground that you can trust. So it really brings me to a point where it's, and this is an analogy we learned from this extravaganza, which worked very well. Everyone understood this. There's a difference between baking your own cake and actually going out and buying one that's been done professionally. And as much, I know people love to bake cakes, so it's a very basic analogy. But the reality is, if you're going to go out and try and bake your own cake when you're investing abroad, you seriously increase your risk and probability of failure. Now, what we do is we produce these cakes every month, well managed, good returns, in sound areas that are safe. We don't do rock and roll investments. We actually invest for the long term, a place where you can, what I call set and forget. You set your money down and you forget about it and you let it run and run and run. and that accrues capital growth, and your rental income gets accumulated in your account. And that's what we're talking about here. And the difference between baking your own cake and actually working with us is, if you're going to be baking your own property cake, you need to wholesaler, someone who's willing to sell you the property. Now, there already, you've fallen flat on the ground. There's no ways you can buy the properties with the returns that we are getting, because don't forget, you won't be able to get into that inner circle. You'll be getting the riffraff. You'll be buying the properties from other investors who are trying to sell the investments that aren't going well, those sorts of things. Let's assume you find the deal. You then have to begin your due diligence. You have to find trustworthy contractors. Scott didn't have a problem on his house because he's a dopey. He's a very thorough, very efficient person, but finding trustworthy contractors is a bit of an oxymoron. So you need to supervise the rehab and make sure that it actually runs smoothly and on time, which is, again, if you're afar, impossible. You have to pay for the rehab and the property. Rehab is the refurbishment or redecorating phrase in the States. You have to apply for financing. You have to market the property for tenants. You have to vet the tenants. And the list goes on. That's a very brief, basic list. You have to do a search on the lien, on the titles. Are you buying a property that has a significant amount of debt assigned to it, which in the States, the debt from a lien, if someone's accrued a debt in that property, stays with that property. So you might look at a brochure from another independent offshore American and we know this is happening here in South Africa, and you need to be aware of this. And they sell your property, and it looks great on paper. Meanwhile, you're buying a property with 20, 30, 50 grand worth of liens on it. So you're well below, you've lost a lot of money there, and you are personally responsible for that. So these are things that you really need to know. All that stuff, we actually vet. We do a complete end-to-end solution so that all you have to do is a few signatures, transfer the money. In fact, we actually transfer the money for you even. So all you need to do is a few signatures. And you can go about your life. So I don't know if Brendan's online. Brendan, you online, mate? I'm being adventurous with my webinar skills here.
It should be online. He said he's online.
Yeah.
Yeah.
He's probably, okay, cool, mate. You're not changing nappies, eh?
No, not yet.
Okay, good. Good. No, I thought maybe take a couple of minutes and tell us your story, mate, because I know that you've had some experience before working with us.
Yeah, I think if anybody was at a couple of the extravaganzas, you might have heard the story already, so I apologize if you have. But for those that haven't, basically I needed to buy a property in the States. I saw the opportunity for what it was about 2 years ago, and I had to get my feet in, in the market. So my wife and I flew over there, and just like inexperienced people that we are, we thought we could find something within 2 to 3 weeks of looking at it. Looking at stuff online, getting hold of normal realtors who don't even understand what the hell cash flow is, or net yield, or gross yield, or what the difference between the two are. So I had to educate the realtors in order for them to be able to show me some properties that would fit in line with what I wanted. And after looking at lots of them, we drove pretty much Florida flat, and then figured out that we actually needed a financial structure to own the properties, and we needed bank accounts, and we got all of that sorted out. We started putting in offers on properties after we had our money overseas and all the rest of that stuff. And we'd look at something online and say, okay, that sounds really good. Let's put it in an offer. So I'd put it in an offer of below what they're asking, because it's a down market, and my immediate thoughts were that go $2,000 less and see if I can get it. And then the bank would come back and say, look, this is the highest and best scenario, which means there's multiple people that are involved that have put offers in on the property. So I've got to put my highest in order to stand a chance of getting it. So now I'm bidding blind. So what I mean by that is I have no clue what the other people have bid. It's not like an auction where the guy's standing there with a hammer and he says, okay, it's going for $41,000, $42,000, okay, it's sold to this guy for $43,000. This is a closed bidding scenario where you have no idea what the other guys have put in, and the banks encourage the highest and best scenario, because then they get more money for the properties. So they will, as hoping to encourage the highest and best. needless to say, after putting in some offers, what I have to go through to get that offer accepted or at least looked at is you've got to pay the $1,000 deposit into escrow. You then got to pay, because you have no idea what the condition of the property is like, it's advisable, I wouldn't really advise anybody to do it without getting a third-party evaluation unless you've got people that you can trust over there. I didn't have any people, so I hired a home inspection crew to give me $50 every time I put in an offer on a property so that they could give me a third-party report with pictures and videos and all the rest of it to tell me what the condition of the property was like, so that I could have an idea of what the cost to rehabilitate the property would be after I acquired it.
So you basically pay $250 just to make sure you're getting the property at the right price every time,
yes,
even though you weren't promised the property.
That was my risky money. They were saying, look,
no,
I'm willing to spend $250 to find out if it's worth buying or not buying.
no.
So for me, it was pretty good value at the time because I didn't have anybody else that could help me, who I trusted, so I needed to pay somebody for that thing. And through doing that, eventually it got to a point where we'd put in 12 offers and we hadn't bought a single property. Every single time it went to highest and best scenario, every single time we lost it. And I'd track it and see, because the transfers happen so quickly in the States and the information is fairly freely available, I could log on to the internet 3 or 4 weeks later and go and see what the property was actually sold for. And many times I'd be like $3,000 out or $2,000 out, pretty close, but I was still below the highest and best offer. And because I'm a foreigner and I'm on the other side of the world, even though my offer is cash, they don't give a rat's ass. If the other offer is highest and it's cash, they're going to take that every time. So I didn't really stand a chance until I worked backwards from the rent. So eventually, after I actually wanted to bring the money back, my wife convinced me. She said, no, just leave it there, just try one more time. I was like, look, I'm done. I'm not going to get anything over there. Just close down the LLC, bring the money back, and carry on investing in South Africa. It's easier. I can control it. I'm here. And she's like, no. Keep the money overseas. We will win through. She's quite a tenacious person, if anybody's met her. And we did. And finally, on number 13, we actually got it. Like you said, we bought our first place. They were advertising it for $29,000 at the time, back in the good old days when 2-bedroom condos in Orlando were really, really cheap. And we paid $42,000 for it. So to put that in perspective, we paid $13,000 more than the asking price, and we got it. And that was because I worked backwards from the rental yield that I was prepared to accept. And I said, look, I'll pay this much for that kind of property. And then I got it. And the second one I bought in Orlando, it went much smoother, much easier. And we got
this is that inner circle that I was talking about, eh?
But
what's so funny is I got a better rental buying from them than I did buying for myself. So it was just so much easier.
But also, just quickly, just to point out a percentage, you ended up buying that property for 45% more than it was listed on the internet. Just for the record.
Yeah, I mean, that's how incredible it actually is, and how to try and gauge a value when doing research online. So, for example, if you had to go and look on a whole bunch of websites like Realtor or Zillow or any one of those, and you find a place, they don't tell you on the multi-listing service if it's a short sale. Now, if it's a short sale, it basically means that the owner of the property is underwater in his bond, and he's gone to the bank and he said, listen, I can't afford the repayments, can I please sell it for less than the amount owing on the property? Then the bank will have to agree, and many times there's a second because they have so many mortgages on the properties, and all of them have to agree to take a bath, and it takes a very long time. So if the guy owes $100,000 on it and it's only worth $50,000, and he says, look, I've got an offer for $50,000, then all the banks have to agree, and that can take anywhere between 6 months and a year to actually go through that short sale process. And the same thing happens. Short sales also become highest and best scenarios because there's a whole bunch of investors bidding to try and get those short sales who will wait it up. And then another thing that they don't show on the internet is if it's a Freddie Mac or Fannie Mae property. If it's a Freddie Mac, they've got a homeowner's first look initiative, which basically means that for the first 14 days that it's advertised, only owners that are going to be residents in the property can actually put an offer. And what inevitably happens is in those 14 days, it gets sold. So it might look really cheap. It also goes into a highest and best scenario, but only homeowners actually have the opportunity to buy it. Owned property, which is basically a bank-owned property that's been through the foreclosure process and the auction process and all the rest of that stuff. The only reason the bank owns it is because nobody else wanted it. If the bank bought it back on auction, it means that the investors didn't want it, the hedge funds didn't want it, nobody on the planet wanted it, and the bank was forced to buy it back and put it on the open market on the multi-listing service, which means it's one of those things, you're not in the inner circle, and it's the dregs that are left for everybody else to pick up on the multi-listing service.
You end up buying a lemon, as we say. That's a technical term, isn't it?
Yeah, exactly. I mean, I put a bid in on one. I thought it was a fantastic one-bedroom condo in Orlando for $25,000. When the home inspector was walking up the stairs, he phoned me. He's like, "Look, dude, get your deposit back as quickly as possible. You can smell the mold from here." And if anybody's interested, I can send you photos. The mold had literally destroyed the inside of the property. The walls were rotten through. And it's because it's a high humidity environment. So if the place has been standing empty while it's going through the foreclosure process and the air conditioner has been switched off, the mold will set in and it will destroy the inside of the property. And
so just as a laugh, if you want to see pictures of that, type mold and we'll email those to you.
Yeah, just for a bit of a laugh.
I'm just conscious of time, Brendan. We've got about 10 minutes left, everybody. I do apologize. I've got about 10 more minutes. So thanks for that story, mate. And if you want to see the pictures of the mold, everybody, type mold and as a laugh, we can see how close Brendan came to buying a lemon and take the mick out of him. So thanks for that, Brendan. Thanks, mate. So just on the another question we get asked quite often is, what's in it for IPS? Why, you guys aren't philanthropists. Why are you doing it? The bottom line is, we up front from you, we actually just paid a commission from the seller, but more importantly, the more properties we can provide or sell or buy or whatever as a group, which is why we created Wealth Migrate as well, the more we can stay in contact with that inner circle. That is actually our number one reason, to be honest, because if we can't do volume, then I'm afraid we're going to be investing out there buying lemons just as everybody else. So it's really important for our efficient business, both for yourself so that you are buying good investments and that they're managed well, but equally so we're managing the agents and or the partners on the ground in Memphis, Atlanta, and Orlando, because these guys have got oodles of money at their disposal from funds. So from that perspective, it's we generally do work on that philosophy where birds who fly together actually create a much more efficient way of creating. So we get the management question quite a lot. What happens on getting my properties managed from afar? All three of our partners in each area not only source the properties, but they actually manage the properties as well.
Is it me or has Ryan disappeared again? Guys, can you hear me?
Like Ryan has disappeared again.
Is it? I mean, look, I think just to clarify what you were saying in terms of the management, we believe actually that buying a property is 20% actually about buying the property and 80% about the management and maintenance. And so what's absolutely critical for us is to have a full solution. And one of our strategies is to actually work with companies where they've got everything under one roof. So the problems, certainly even from my own experience in the past, is that if you deal with an estate agent or even a developer and they sell you something, they're always going to tell you, oh no, you'll get $1,000 rent. And then the problem is once you own it, they hand you over to their cousin, Mary Puchenpool, who's going to be the management agent. And she runs along and she says, they're dreaming. I could never get $1,000. Actually, it's only $600. And there's very little accountability because the left, the one party's not accountable to the other party. And so for me, we always like to work with companies where it's all under one roof. The left hand might be finding the property and renovating the property and providing the full property in terms of the actual property, but then they hand it over to their management team that is in-house. And so the left hand is accountable to the right hand, and if the left hand says it'll be $1,000, well then the right hand has to deliver at $1,000. And we found that to be extremely beneficial, certainly from our experience in the UK and Australia, and very much now in America as well. And I mean, look, even over, as Ryan mentioned, we've looked at multiple different cities. We've looked at over 14 different cities. And people always say to us, why do you choose the different areas? And we say, well, look, there's plenty of opportunities in America. There's absolutely no problem with that. But it's actually not about the opportunities in America. The real thing that is important is the partners on the ground. Because we believe that, yes, we've got to understand the fundamentals, we've got to understand what's happening in the area, but the most important thing for us is actually the partners and whether the partners can deliver. And, for me, in terms of this frustration that a lot of people always ask is, well, should they, do the thing because it's a long way from home, how do they do it? And for us, it's very much about actually being able to provide that full solution, that end-to-end solution that involves the management and the maintenance and everything else. So, just to give you an idea, that is one of the classic issues that we've had in the past, and certainly it's one of the biggest reasons in terms of people, and the reason that it's one of their fears, and it's one of the reasons they don't take action. And I think one of the most important things when people come on buyers trips is that they actually come over and they meet the partners on the ground, they see the management solution, they understand the management solution, and certainly in terms of our current clients, I'm sure many of them would give you a huge amount of understanding. The other thing is, what happens if they don't pay the rent? Well, as you know, in South Africa, my wife is a property lawyer, and we don't really bother with trying to get people out, the legal route, and I'm not sure if I should be saying that. But the problem is, I believe if you live in a cowboy country, you're going to act like a cowboy, because it takes 6 months to even 2 years to be able to get people out of your property. Whereas in America, everything's legal, everything's in favor of the landlord, like Ryan's already mentioned, and it takes 21 to 45 days legally to actually evict someone and get them out. The fourth problem is, why should I do it now? Have I missed the boat? I think it's something that's very, very relevant. A lot of people they heard the story about Brendan buying properties at $40,000, etc., etc. But for me, it's all about replacement value. At the end of the day, that house in Atlanta that you saw that was $200,000, it's basically about $100 a square foot. If it's $2,000 a square foot, effectively it's $200,000. And so, granted, when Brendan and I were there in April last year, you could pick those things up for $65,000, $70,000. Okay, now you're buying them between $100,000 and $120,000. So don't get me wrong, like, you could have done better if you bought a year ago. But I believe that if you're buying at $100,000, $120,000, when the replacement value is still $200,000, it's still significant value. The market has certainly recovered, as Ryan has explained to you. It's definitely on an uptick, and there's no doubt about that in terms of where it's going. But one still has to understand the opportunity is still present. The challenge is how long that opportunity is going to last. Because once the prices are $180,000, $190,000 in the likes of Atlanta for that same replacement home at $200,000, well then, in my mind, you've come back to Sydney or London where, you're buying property at full market value. Then you've got to decide, is it still a good investment? Does it provide me with a rand hedge, etc., etc. So these are the components for me that are critically important in terms of, should I do it now and have I missed the boat? And the other thing that is absolutely vital is that the rand plays a massive part for us as South Africans. And, it has had a big impact in terms of our clients and what's happened. And, one of my clients, actually a good friend of mine, has been threatening to come on a buyer's trip since I can't remember now if it was August or October. But anyway, I met with him last week, what's today, Wednesday, so it would have been last week, Thursday or Friday. And he sat me down, and his business partner, they had two business partners in the business. His business partner took action, sent the money over before February, when we were there in February, and actually invested and got going basically. And he had a few concerns, and he wanted to wait, and he actually wanted to wait to the extravaganza and meet the partners on the ground, which is fine. Every man to himself, and everyone's got a different risk appetite. But sorry, just 2 seconds.
You there, Scott?
Yeah, I'm here. Are you back, Ryan? I was wondering if you'd...
Yeah, sorry. I think my mom hacked into my laptop and switched it off because I dropped the phone on her earlier.
Okay. Well, listen, just let me just finish off, and I'll hand back to Ryan here. But basically, the point of the story was last Thursday, I sat with his client, and he's now coming with us in May, and him and his business partner, he did the calculation, and just by not taking action, he had effectively spent another 50,000 Rand, or wasted 50,000 Rand. I mean, I don't know how you quite want to describe it. You could take 50,000 Rand and throw it down the toilet. You could give it to a charity. You could take your family on a holiday. But the bottom line is that 50,000 Rand. 50,000 Rand is 50,000 Rand. And that was the impact of waiting literally six to 8 weeks in terms of what's happened with the Rand. But anyway, back to you, Ryan. I'm going to change you back to the presenter there so that you can control the keyboard.
Thanks. And if my mom hacks into my computer again, we're almost finished. So yeah. Okay. So you can see my screen now, yeah.
We can see your screen. We just need to go back to your PowerPoint.
Yeah. There we go. Good. Awesome. So basically, just to we're going to just give you the next steps here, everyone. Thanks for your patience. We've run over a little bit, but hopefully I'm sure it's been worth your while. Everyone stayed online, so that's always a good sign. So what as I said earlier, please request a free consultation here with us. What we'll do is work through what it is you're looking to achieve, what your current capital situation is, how we can actually move money for you abroad. We've got everyone that can actually help you with that process. And we'll also go through your strategy, the different types of property. Do a 3-day workshop on each area, let alone cover all that stuff. So there's a lot of information we can help you out with. We've got it all. I've said we've got lots of research. It's fully available as long as you get in contact with us. I haven't even spoken about what structures to go off and purchase in. We've got all that information. If you're going to be investing in this, you do need to be investing in, this is what we've been advising, and certainly everyone else has been doing. You also need to get a bank account, and you can't do that unless you're in the States or you are working with us, because we're able to do that through our connections there. So if this is something you want to consider doing, please type in investment consultation. We'll give you a call. I know that, for example, we've got the buyer's trip, which Scott's referred to. The next one's on the 3rd of May to the 12th of May. We fly from South Africa to Atlanta. We then hit New York. We look at some. We then fly to Orlando, look at the condos, look at the family homes. We then fly to Memphis and look at some of those high-income properties, producing properties. And we fly to Atlanta. And everybody that comes with us to Atlanta falls over. They can't believe how much space these properties have. They are huge. They've got massive grounds, and they're very well kept. So why not come and check it out for yourself? If you're that keen, please do. We're completely transparent about who we work with. Just type in a circle. Type in investment consultation. That could be a cool thing to type in as well. But yeah. So also bear in mind that even though we're going on the buyer's trip, and I'm saying you can come along, a majority of the people who we support and look after and been doing so now for a while actually tell us after their investment consultation what they're looking to buy, and then we go along and buy for them. That's actually, Scott used to go over, buy properties for his investors, and then only realize, okay, cool, how about bringing everyone along so they can either look at the properties they've bought or they can actually purchase more properties. We literally go into a property and we say, right, let's buy this one, and we look at it, we look at the area, and we literally take those properties off the market there and then. It's very exciting, and ideally something you should look at doing. But I would actually say, because the market's moving so quickly, if you can't join us now, you can maybe join us later in the year. We can still buy those properties for you. So make sure you get an investment consultation booked in with one of our team. Here is the scene from the last buyer's trip, and we're all standing outside that property there. I believe that's Mike. Mike's in the middle there, and he actually went out and bought one of those. He bought that property, and he actually got 3 more, I think it was, off the top of my head, and he's also now part of Wealth Migrate. So that's what we looked at. Sorry, in a sec. Then we were in New York. It was much colder. Again, looking at some Wealth Migrate opportunities, and being shown around there by the inner circle. Here's some people in an inner circle buying at auction. Now, if you think you can buy properties online from a distance, this is the kind of operation you're competing against. It's not going to happen. You can see there, there's operation. There's really hardcore, a lot of data. I know a whole bunch of guys in the team actually buying property. Here's another property that...
Sorry, Ryan, just before you move on there, if you can just go back to that slide, because I think it's quite important. You can see we actually with Dr. Dolph de Roos. You can point him out there. He's kind of standing up looking himself. He's the author of Real Estate Riches, the Rich Dad, Poor Dad series, and probably one of the best-known international authors in the world. And Brendan and I shared over a week with him, learning from him and analyzing the markets. This was actually in Phoenix and in Vegas. So, you know, there's plenty of markets that we're not talking about tonight that we've thoroughly researched, but we don't necessarily personally invest in them, and that's why you need to have an investment consultation to understand why we don't invest in those markets as well.
I mean, that's a great point, Scott. Every time I'm talking to someone, they say, what about Phoenix? What about Detroit? Detroit's a ghost town. Phoenix has tanked out. There's no more opportunity there. So, you know, we can back all this up with hardcore data. It's not, you know, it's not some hype or anything. We've got extensive research, and again, if we don't have the research, we've got access to that through our inner circle. So make sure you get in contact with us if you're uncertain or considering investing in the US, regardless of the area. Again, there's another property. I think that's Morris's house, Scott? You
correct.
Yeah. So again, went in, bought that property. It's massive. Great property to rent, really well refurbed inside. And then this is how you travel between the. Is this how you guys travel between the properties, Scott? This is how it works? Is that? George is so massive, you have to fly. Oh gosh. But we do have some time for you to go explore the local touristy stuff, and you know, we have a good time. Everybody that came along on the last buyer's trip and every other buyer's trip turns out to be good friends of us. I have them often phoning me on the weekends. We have a good chat. You know, we like to do business that we like to do business with people that we like, and I'm sure, you know, people can say the same about us. So here's another property in Orlando. That's a condo. We had a lot more fun pictures, but I can't take them out to save time. Here's us in a bank where we actually set up our bank accounts. You know, the kind of people we're working with in the banks, they stay open till 8, 9 o'clock just to help us out. You know, this is the kind of stuff you can't buy on the internet, and you can't find, you know, even if you were lucky. So these are the bank people we deal with, and those are all our bank accounts there. This is one of our partners giving us the brief. Every day we're on the buyer's trip. We start off with an hour brief of the local area and what we're going to look at and what we need to avoid, and particularly which areas to avoid. And coincidentally, we find that the areas we need to avoid are a lot of the areas being promoted by our competitors here in South Africa. So that's probably a good strategy to see. Is if you are curious to know which areas not to invest in, just go look at what our competition is promoting. Is that too cheeky to say that, Scott? Sorry.
We recommend it, Ryan. Many a secret shopper has gone out and checked it and come back to us.
Yeah, I had someone come today as well. That's why I could confidently say that comment. So, yeah, again, and this is important, hey? This is where you actually get to meet the inner circle. Some of these guys are going to be dealing with you on your property purchase, and they are actually, this is a team in Orlando, and this is the whole team that makes it work. So we meet them for dinner at the end of our property day, and you can then fire as many questions as you want to them, and you can get to see who's actually going to be processing your purchases. So we've got the Leon's guy there who does the research on whether the property actually has any debt secured against the property that you might inherit if you aren't familiar with how to do it. They've got the agent, the whole tutor is in there, and we also end up having a good time as well. You can
Just
see
quickly
all
as well,
water
you
on that
didn't-
table.
Sorry, Ryan, just quickly as well, you've got the accountant there that does all our tax and accounting for South Africans, and he specializes in understanding the difference between America and South Africa. And I mean, I think it's just something, I spoke to a client about a week ago, and she said, you know, you guys are quite expensive. We don't purport to be, we're not the McDonald's, basically. We're a private banking service. We personally spent 140,000 Rand with Grant Thornton, the biggest top 5 accounting firm in the world, so that we could understand the best tax and structuring and, you know, all that type of stuff. We only want to provide the best service. We're not the cookie cutter service, you know, and that's why we deal with these type of people.
But property is not the kind of thing you want to actually cut costs on, because any area you're going to cut costs on, even when you're buying appliances, even when you're doing your fix-ups and stuff, you're going to ultimately pay on having it fixed up again. You know, if you're cutting back on the guy who's checking your liens, he might make a mistake, miss an 80 grand debt secured against your property. You know, and so you kind of sort of cutting your nose to spite your face type thing. You know, you want to make sure you're working with premium people in property, because this is a long-term thing. You're not buying apples and oranges on the side of the road. But another thing that is quite worrying here, Scott, is that there's only glasses of water on this table. So we might need to get a new picture on that. It might put people off. So there we are here in Memphis, Beale Street, having a good time. It's the famous street where a lot of famous musicians started their careers. So we not only make good money on our investments, but we actually have a good time. And this was Scott's birthday, where we got a beautiful dinner cooked by the man on the left. His name is Victory, I think, from memory, and he ended up singing Scott an incredibly soulful, heartfelt happy birthday whilst barbecue ribs you're ever getting alive. So we get treated well by the agents, the partners, and we get treated well by the inner circle people that we are looked after there. Those are some tenants. I don't know, that's you, Scott, isn't it?
What's that?
Sorry, I couldn't resist. You gave me that slide. I can't take the mick out of you. But I think you guys went over at Halloween or something, didn't you? And then you ended up going to...
That was Halloween last year.
You get into more than one inner circle. Yeah, that's right. So we get into all sorts of inner circles there in the States while we're abroad. But the bottom line is, you know, here's another good picture. This is Ian. He actually bought a few properties before coming, and we ended up popping into that property just by chance. Got to meet the tenant. Lovely person, invited us in. We showed the property was immaculate, and Ian's gone on and actually done some more. So, you know, we've got plenty of testimonials, loads of testimonials of people who've invested with us, been there, testimonials recorded at the different properties in the different areas. Please just get in contact with us. We can forward those to you straight away.
We even just on YouTube.
So if you're interested in the buyer strip, you're welcome to come on. Yes. Yeah, absolutely. So if you're interested in coming along to the buyer strip, type invest, or maybe I'd like to see who's interested actually. If you are interested, type buyer strip, and if you're interested in us potentially purchasing something for you on the buyer strip, then please type in buyer strip as well. And that gives us an idea who's interested in which particular opportunities. So that's another property in Atlanta. So I don't know, Scott, if you, I know you've created this. I'd like you to go through this if possible, please, just as a wrap up.
I think all that I was trying to do was that, you know, and Brendan and I went over originally in April, and you know, we were amazed by the opportunity, and we tried to get our ducks in a row and get started as quickly as possible, and we pretty much managed to get started in August. You know, as Brendan said, he'd been doing it a while, but I'm talking in terms of some of the other areas. And when we went back in October, we've been going every 3 months for the last year now, and from August, the actuals in August, the rand to dollar was 8.11. Believe it or not, it seems like a long time ago already. The prices of the houses were, you know, in the region of, call it $85,000, which was costing us X amount in rands. In October, you know, the numbers had changed. Those were the actuals. And what we tried to do is we tried to predict where we'd be in February, you know, if we waited another 3 or 4 months. And then you can actually see there the next column is the actual. And so the guys that invested in August, the men and women that invested in August, had actually made a 58% return on their capital, on their, not their capital, 58% return. Now, don't get me wrong, we're all intelligent people and we know that, you know, they haven't necessarily banked the profit because they haven't sold the property. But it's certainly just showing you an idea of the trend, both the rand devaluing and the property price going up. And so all that I was trying to do in the yellow was actually predict forward to April and possibly even May when we do the next buyer's trip in terms of where the rand's going. Now, this is not just a gut feel. It's actually based on James Painter's research. And interesting, right now at the moment, I know that the rand is slightly recovering, which is actually what James said. If you go and look at James's research, if from the extravaganza, anyone that was at the extravaganza, he actually said it will recover just in the very near term, so the next couple of days and the short term in terms of a couple of weeks, and then it's going to bounce through he's got a whole way of explaining it, and it bounces through the barrier and goes out the other side, and he's predicting us to be in the region of between 980 and 10 rand to the dollar in the next couple of months. And so that was it, and it was just taking what's happening with the property prices and just showing people the price of procrastination. You know, I've mentioned our one client and who is actually a friend of mine, and how just by waiting a couple of weeks, it's cost him 50,000 rand more than his business partner. You know, you both want to invest, but the one guy took action, the one guy didn't. It cost him 50,000 rand. And all that I was trying to explain to people is that time is of the essence, both because the rand is a challenge and something we can't control and is going in the wrong direction. And as Ryan's already mentioned, long-term is going anywhere between 14 and 20 based on James's research. And to be fair, he's had an accuracy of more than 80% since 2005. And then, you know, Brendan, myself, Ryan, Yaku, Teresa, Raleen, who have all been to America, can attest as to what is actually happening on the ground there in terms of prices going up. So that's just it's just trying to explain the trend and show the cost of delay.
Yeah, it's quite radical. Our you know, when we say procrastination, you normally think about a year, but this is quarterly. It's quite intense. But yeah, thanks for that. That's great. So,
and if you had to, I just want to mention one thing there, Ryan. If you had to look at what the rand-dollar exchange rate is now, that it's on its recovery bounce, and it's exactly that October rate, 8.86, 8.89, somewhere around there. So if you actually take action faster right now, you get the benefit of where the rand's sitting now before it bounces back up to 950.
Correct. Absolutely. Yeah, absolutely. So, so everybody, thank you for your time. We've run over a little bit. We've had some surprises. We've had my mother calling. We've had her hacking into my computer and switching it off. And we've had some great contributions from Scott and Brendan as well. And thanks everybody for participating. The best thing you can do now is and let's see how we can continue serving you further. It's been a pleasure having you all online. Thanks, Brendan. Thanks, Scott. And here's to you all investing with confidence, and hopefully we can do business with you in the future. Enjoy your evening.
Cool. Cheers, guys.
Good night.